Welcome to Something More with Chris Boyd. Chris Boyd is a certified financial planner practitioner and senior vice president and financial advisor at Wealth Enhancement Group, one of the nation's largest registered investment advisors. We call it Something More because we'd like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients on Cape Cod and across the country. Here's your host, J. Christopher Boyd.
Welcome, and thanks for being with us for another episode of Something More. I'm here with Jeff Perry. We're both of the AMR team at Wealth Enhancement. Hey, we're both sporting our Wealth Enhancement today.
Is that green, Chris?
Yeah, I like
Mine's
the blue better. Yeah. That looks good.
Yeah.
Anyway, what we're going to be talking about today, we have much to discuss, a lot happening in the news, and thought we would just check in on some of these topics as they impact markets and relevant for investors to be paying attention to, and may have some influence over what you're thinking about your portfolio decisions and the thinking as you look ahead for the final quarter here. We're well into the fourth quarter.
Yeah, we're a month in, right? It's I guess we should say the date here because in the news,
things can change. Yeah, that's right.
Quickly.
We continue to be dealing with the government shutdown. How far along is this? Is it over a month yet, or is it?
So it was October 1st. So this is day, depending how you count the day, 29 or 30.
By the time this airs, it'll certainly
be over a month. Yep.
Kind of surprising. It was one of the longer ones, as I understand it, Jeff.
I think it's the second longest so far, and I don't really see an imminent end.
No, you don't see any meeting of the minds coming anytime soon.
I was in Nashville recently for the Patriots game and other things, and my wife and I were walking down the street, and behind us were there were four attorneys, and they were obviously interviewing a new one, and their whole conversation turned to, they were very loud so we could hear them. We weren't eavesdropping. We were walking. They were behind us.
Oh, and they were yakking it up. Chatting.
And they were obviously Democrats. Because, you can pick this stuff up. And one of them said, I just don't know when it's going to end because I don't know who has the leverage. And that really, I'm not a Democrat, so I might disagree, but I don't know who has the leverage. So when both sides either think they have it or they don't, it's not like you think one side has it, so you kind of go towards that side and say, well, I have to give up something.
Yeah.
I think either side has the leverage. And if you look at the polls, it's slightly more negative towards the Republicans, but they're the party in power, so I get that. But plenty of people in the polls think that the Democrats are wrong, and a little bit more think the Republicans are wrong. So, but it's not an obvious difference.
Yeah.
Which leads to, I don't know if this ends anytime soon.
Yeah, no. So what's the consequence of that when it comes to, on the one hand, there's always that expression, no citizen is safe while Congress is in session. So,
and they're not doing anything new.
At least there's, nothing bad happening. But
unless you're a federal employee or...
there's definitely some people adversely impacted by this. And even though there's been a few carve-outs here and there for who's continuing to be paid, presumably.
Yeah, basically the military. It's pretty much all I've seen, right?
Didn't they do something for TSA or something as well?
If they did, I missed it. There's so much happening. It's easy to miss something in the news.
Well, that's true for sure. Well, that's why we're doing this, right? But in any event, just that notion that there's a lot of people out of work. There is it is Brian Regan on our recent economic and market update webinar made the comment that, usually this is temporary. Usually federal employees do get back pay once the resolution occurs. So although it's challenging in the near term, it's probably not something that's permanent in nature.
Right.
For the disruptions that happen, though that's easy for us to say, and not as a family without a paycheck coming in the midst of this. But the economic impact of a government shutdown. What's your take on this? How does this have consequence long term?
I want to mention one more thing, short term or current, or it certainly fits into the economic outlook, but there's 48 million families, I think, on SNAP benefits, Supplemental Nutrition Assistance Program, and that can be people on SSDI are eligible. There's Medicaid qualifications that make them eligible. Some senior, it's the whole breadth of the.
Yeah.
And there's women and infants and children. So
and just SNAP again is like food assistance.
Yeah, Supplemental Nutrition Assistance Program.
Yeah.
And it's food assistance. The average benefit is, I think, $178 a month for people on it. It's basically, I think we used to think of those, showing our age, I'm showing mine.
Green stamps or something.
Right. They used to have the books with we had a couple of retail stores on the Cape, and we used to accept food stamps. So it's assistance to people who are food insecure, right?
Yeah.
And it's for people who are living so much below the poverty line. And that program is, they did get their October 1st allowance, if you will, benefit, but this November 1st benefit is not going to happen. And so I think that matters a lot.
Yeah, that'll have a big impact.
Yeah, we were talking before the show that a client of ours works at a food pantry, and he's just seeing tremendous amount of increased people coming in, that they've never seen before. So, that certainly affects the lower end of the economy the most, people who need that assistance. But to get more direct to your question about what do we think about it for the general economy, I think it has to have a slowing effect on it. I mean, people without paychecks spend less, right? And they can also, depending on how tight their budget and where they are in their financial development, this could result in credit cards not being paid, auto loans not being paid, mortgages not being paid, and all of these things have a negative impact to our economy.
It does seem like this is going to drag on quite a while longer, and which on the one hand is frustrating for these employees who are affected by it and the benefits that are affected by it. One of the other things that came up this week was the disruption in financial data. We had the Federal Reserve make an announcement this week. You want to touch on that?
Yep. So on Thursday at the regular scheduled Federal Reserve meeting, as expected, the market and the prognosticators thought that the Fed would lower another quarter point, and they did. And to your point, introductory point, is that they had to do this without a whole month of data. And I think they get data, they get private data,
and other data, yeah,
right.
But the longer this goes, right,
and one of their charges is stable employment, and they're not getting government unemployment, employment, data ranging from labor participation to the unemployment rate, all those things and everything in between. They do get ADP data, and they do get some
private data,
related data,
which is much more volatile typically.
That's right.
Yeah,
that's right. And so, in addition to the quarter point, which the market expected, the market, in my view, didn't really react to that. They didn't say, "Oh, great, yay." They probably
was kind of expected. Yeah,
they probably would have said, "Nay, boo," if they didn't do it.
Right.
But the Federal Reserve's comments about the next possible, maybe people think probable, reduction in the rate, which would be December, Chairman Powell said that is not assured.
Yeah.
Basically. So I think the market was a little disappointed in that comment. But I think it's, correct. It all depends on the data. A lot changes in the economy in, a couple months, and even more so with all these things that we're talking about today and many others.
Well, I think one of the areas that the data was asked to continue even into this challenge was on the issue of inflation.
Right.
Specifically because the timing for Social Security benefit calculations. That was another news item over the last little week. Why don't we talk about that for a minute or two?
Yep. The millions, hundreds of millions of people on Social Security, maybe, wait for this annual cost of living adjustment. We know that the current 12-month trailing inflation rate is 3.0%. So I think most people were hoping that they at least keep up with inflation. And the Social Security Administration announced it was going to be 2.8%.
2.8% for the annual COLA, cost of living, and essentially presumed to be the
Pretty
version of the CPI that they review.
right.
There's like multiple different variations on what's included and what's not. But
So just a couple quick side notes here for listeners' information. The average Social Security benefit is $2,066. Who knew? I don't know what I would have guessed. I guess that's about what I would have guessed.
2000 and what, 66?
66. Yeah.
Okay, that's interesting.
And so they're getting the average person, if you were making $2,011, because this is going up $56. My math was just wrong there, but you get my point.
Yeah.
The average Social Security benefit went up $56 if you're the average Social Security recipient.
Yeah, that makes sense.
But it's not all going to go in your pocket.
Oh, that's a good point too, right? Because there's other costs that get adjusted at the same time. Most notably, when we think about what happens with Medicare premium,
Right.
These premiums usually come out directly from your Social Security benefits. So when you get your benefits, when we talk to clients all the time, they talk about their net benefit. They're not thinking of their gross benefit. They're talking about what lands in their checking account. But before it lands there, there's a cost for most people when they're 65 and over.
Right.
When it comes to their Medicare premium. Did those numbers get announced as well?
They were, and it's, if you think about I'm going to try to make this quick so I don't go too far off on a tangent. When you think about the government shutdown and what the Democrats are trying to do, they're trying to get the Obama era subsidies into this agreement to extend the government. That's what they think they want out of this negotiation.
Yeah.
And so I know in my health insurance and people I know, it's been going up a lot. So
I mean, it's
the
the rate of inflation in healthcare is for the last 20 years is extraordinarily high, right?
Yep, and not sustainable really. And something has to be done. And we can debate whether subsidies is the answer because everyone's not going to get a subsidy. But anyhow, back to the increase on Medicare premium is 11.6%. So this is just in line with what we're talking about and what what the Democrats are talking about. That's not the solution in my opinion, but so anyway, so that is going to be an average additional cost of $21 for the average Medicare recipient.
Yeah.
And so the net benefit.
So even though they're getting an inflation adjustment, they're likely to see a reduction in benefit, to your point.
Yeah, a little bit more than a third of it is going to go to the Medicare premium. So for all those people waiting for this Social Security adjustment, the net benefit, not counting taxes, if you pay taxes on your Social Security, which a lot of people do, is $34.50. So I'm sure everyone will enjoy it and spend it, but it's not a game changer if you're on if your budget if your financial health is significantly based on your Social Security, which we hope it's not for most people, but we know in fact that it is $34.50.
Yeah, a month. It's going to go quickly in the face of the inflation we've been seeing over time. And we have been seeing, as you said, closer to a 3% rate of inflation.
Mm-hmm.
No, the Fed focuses on a 2% target. We've talked about this over the last year or two in a new normal, I guess, that this 3% range could very well be not uncommon. Now, in the near term, we've had some introduction of tariff costs built into, or starting to work into. A lot of companies have been absorbing some of those costs in the temporary, I think. Whether that is maintained as a permanent thing, I think is subject to debate, because at some point companies return to wanting to increase profitability, and that hit goes through to the bottom line. Eventually that works its way into pricing.
I think that's a really good point, Chris. Because the impact of tariffs is less than what many feared.
At least at the outset, on
so
whenever
far,
that initial announcement.
Foreign nations are absorbing some of it.
Yes.
Wholesalers along the retail line to get to the end sale. I think a lot of pieces of the chain have been absorbing pieces of it because they don't feel that they can increase the product. The customer won't buy it, I guess, or that it's temporary and they're just trying to do the right thing by the consumer. Walmart is probably the most notable one who said, we're going to try not to raise prices until we know what the prices are. But if this does settle into a certain projected long-term cost, that's your point of what companies do, I think, is really key. So this, this inflation rate, which we think is under control, maybe not so much. Maybe it's going to keep creeping. So do we ever get back down to 2%?
Well, and I think, the tariff issue we tend to talk about as kind of a one-off inflation. It's not necessarily recurring, increasing. It's not a ever increasing rate. It works its way in, and then it's in the numbers, and it's not coming out or anything. But it's not necessarily rising at the same rate next year. But in this case, I think our point is it takes time for that to work its way into the numbers, because initially there may be some softening of the impact of these through the decisions companies are making, whether to pass that through right away. And that eventually that will work its way into prices. So it may not happen within 1 year.
It's going to work its way into prices or earnings, one of the other. And
or earnings. Yeah.
And neither one is great news.
Yeah, good point. So in any case,
I guess the great news in that is the federal government, well, depending on your perspective, I don't want to be caught saying the great news is the federal government gets more money. But that's one of the benefits, just to throw it in there, that the president, if he was on the show, would say that, well, there is a benefit. The Treasury is getting a huge amount of money.
You have to recognize that we've had at the same time as a tax cut or an extension of a tax cut.
That's fair.
One Big Beautiful Bill Act, which has a variety of extended benefits of tax-related reductions. And then some stimulative benefits in the near term, with some expense depreciations and SALT tax. And we'll talk about that on another episode. But there's a whole series of benefits, but a lot of it was already baked in because it's extending the Tax Cut and Jobs Act. But there are some additional benefits on the one hand. But on the other hand, you've got this added tax, tariffs, that which is an offset in some respects. It's a detractor. It is, though, helpful to your point, to our budget deficits. Now, not to the point of covering our budget.
No way.
Deficits.
Not even close. Right?
We're running at a $1.5 to $2 trillion deficit annually lately. This is somewhere around $500 billion in benefit from the tariffs at this point.
I'm waiting to see real numbers, not stated numbers.
Yeah. So where it really lands.
Political talk, right.
Right. So it helps those numbers, but it doesn't necessarily resolve the trajectory of where are we headed? We're still headed for bigger debts.
And assuming our spending is under control, or at least at the pace that we're predicting, which is not historically correct. The past, since COVID, we've been spending more than we budget each year. It's not even,
Yeah.
we're not just having bigger budgets, we're spending more.
Yeah. We're outspending the budget we planned as well.
Right.
Yeah.
So that's a whole nother issue and a whole nother show, I guess.
Well, it is, and it's worthy of talking about. Well, I think our next show, we're going to talk a little bit about some of the impact of the One Big Beautiful Bill on year-end planning, and so
Right.
we'll come and talk more about that. Going back to news items and things that may be relevant. So I guess I was a little depressed by the fact that you have a Social Security increase, but not really, because of the costs of Medicare. But in any case, let's turn our attention to some of the other news that has been pretty significant. This week was the president's been traveling to Asia, and quite a bit of news coming out of that in his efforts to navigate the tariff negotiations with China in particular. But we've had some other agreements for rare earth metals and things like that with other nations in the area. Anything you want to highlight or talk about to start with?
Yeah, I think this is going to be characterized as a successful trip for the Trump administration, both from foreign relations, being a good friend to certain allies, and settling some of the trade issues. He had a deal in Malaysia. He had Japan. There was a deal. We'll see these deals when they're
fully baked,
yeah,
but
these frameworks for deals, and then in South Korea, a strong deal with the South Koreans, who are obviously our allies. And so those are all good on their own. But yesterday, meeting with President Xi in South Korea, certainly some agreements. There's an agreement, a 1-year agreement on rare earths materials, so that helps our military and the things that we produce as far as weapons. There's an agreement to lower the increased tariff on China from 20 to 10%, and that was allegedly in exchange for tighter efforts by the Chinese on the chemicals related to fentanyl.
Yeah, still though. Yeah.
Yep. So that's a positive for tariffs and hopefully for fentanyl getting into the country. There was no formal deal on TikTok, which isn't that important to many of us, but is important to a lot of people out there. There was no large.
There is the national security concern,
right?
So that in that respect, yeah.
Speaking of leverage, I think we have all the leverage on TikTok, other than the people who want it to survive. But the alternative, if the Chinese don't make a deal that's acceptable to the Congress, ultimately, and the president, it gets shut down. So I think that's probably coming. The missing piece.
Just on that, I'm sorry. There's a lot of public pressure, though. People use TikTok.
That's fair.
People like TikTok, so I think it'll be hard to see it get shut down without blowback from the American public who use it.
That's fair. Yeah. That's the leverage the Chinese side has, but I think they'll make a deal. That's more than any of these other things, a business deal.
Yeah,
and I think there's negotiation on both sides. For the farmers who were very hopeful that China would restart buying soybeans, I'd say it's half baked, the deal.
It's like there's progress being made there. Yeah.
The Chinese did make a huge purchase. Word of the day, I guess. Before the meeting, they said it was a gesture of good faith. And coming out of the meeting, the Chinese official state government has not said anything as of 10 a.m. on Thursday. But President Trump has tweeted out and said to the news reporters that they have agreed to resume buying a significant amount of soybeans, which is it's important for our exports. More importantly, it's for our farmers who are in some case, solely dependent on this product.
Yeah.
So there's some good parts of it. The president is scheduled to go back to China in April, and President Xi said he would come back. He would come to the United States following that. So that's certainly good for international relations. There was no discussion, according to the reports, on Taiwan or NVIDIA chips, which are two kind of outstanding things there.
Yeah.
And most importantly, there was no, I was hoping, I guess, maybe I'm an optimist, for the big deal on tariff,
Yeah.
These all these issues are resolved. We're going to shake hands. It's going to be 10% or whatever it is.
Yeah.
And we're,
try to
everybody's back
de-escalate
in
tensions
business.
and
Right.
that we're kind of more stable forecast of how things play out between our countries. I do think there's just inevitability that we are adversaries in some respects as we look into the future directionally. And when you look at the sheer size of the economic engine that China is, that becomes a challenge when you think about the ramping up of their military capabilities and their view of that part of the world relative to our involvement or desire to preclude some of our influence. You can kind of see that this is going to be a challenge for many years to come.
I think so.
I think the idea of trade is really important because I think that helps to create a greater likelihood of stability, not necessarily an absolute, but I think it's generally helps to create better relations between countries.
Yeah, both countries behaving and having fair trade between them is certainly safer for the world. I don't know if you saw this one, but going into the meeting with China, President Trump tweeted that we were going to restart our nuclear testing program.
I did see that.
And, the timing is obvious, or he thinks it's obvious.
It's like
not something I would have done, because they weren't going into negotiations without some hope. I don't think that was a positive move, but
it's not as nice a gesture as we'll buy some of your soybeans.
Yeah. Yep. That's what I was thinking. Very well said. So I don't think that's positive, but I don't know what's, ultimately we don't know what's behind that and what's the reason for it. Could be something related to Taiwan as well.
Yeah.
And maybe that's why it didn't come up. I don't know. But it just, puts a exclamation point on your point that we are adversaries. We're not military friends. But hopefully it's heading in a better direction than it was.
Well, as you can see, there is an abundance of things to always be paying attention to. This is just what's in the news on the macro level.
Yeah, we haven't even talked about earnings and.
Yeah, when it comes to the company's specific levels of things to be thinking about as an investor. We'll talk about it some point soon because we had this client event for our own clients to talk about our discretionary portfolio management and some of the positioning and outlook that we've been working into our strategies as we manage client accounts. So once we make that available to the public, we'll have Brian on. We can talk more about some of these things and think a little bit about how's this play out? How do you position? What are some things to be thinking about? But there's always so many things to be considering and paying attention to. And if you find as you get sometimes overwhelmed by all that's in the news and can be stressful at times, it might be a good time to think about a complimentary consultation. We offer a 2-meeting consultation. We gather information, learn about you, and then we do some analysis, and then we present to you some ideas, kind of help you forecast how things look over time. So if we can ever be of help to you in that process, don't hesitate to reach out to our team. With that, Jeff, thanks for all the input. Until next time, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's for financial planning or portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at somethingmorewithchrisboyd.com or call us toll free at 866-771-8901. Or send us your questions to amr-info@wealthenhancement.com. You're listening to Something More with Chris Boyd Financial Talk Show. Wealth Enhancement Advisory Services and J. Christopher Boyd provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is general financial comments and cannot be relied upon as pertaining to your specific situation. Wealth Enhancement Group cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.